Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and the sovereign gold bond, yet another tranche opens today. It's open for subscription until 22nd of December, and it clearly has proven to be the best gold financial product investment until now, with the kind of interest that we've seen, especially coming from retail. So this series is open from 18, that is today, to 22nd. The pricing is at 6199, but if you're buying it online, then you have a 50 rupees discount. And from individuals to HUFs to trusts, universities, charitable institutions, clearly can be a part of this. Well, it has had a lot of positives as well. Well, apart from this, it also is about what you earn on this, which is 2.5% per annum, which is paid biannually, is what you earn over and above the gold price movement. And then it also can be used in various ways. So whether it is about using it as a collateral or it is about investment, it is on the possibility there. You can invest a minimum of 1 gram and a maximum of 4 kg if you are an HUF or an individual for that matter. Well, apart from that, it also is in use for collaterals. And the biggest point is that if you're an individual, then you can, the capital tax gain is something that you can totally get exempted from. Joining us to talk about all of that is Mr. Surendra Mehta. He's Director IBJA. Mr. Mehta, hi, thank you so much for joining us. And when it comes to sovereign gold bonds, we keep coming back to you because this is one product that seems to be doing better and better every single year. So what is it that we've done in this calendar year when it comes to sovereign gold bonds? We've seen records being made, not in just prices, but in sense of accumulation as well.
Well, Manisha, if somebody has invested in sovereign gold bond in 2015, the first tranche price was 2,684 rupees, and now it is 6,199 rupees. And you also get 2.5% annual interest. So in the last 8 years, the investors have got almost 18.75% to 19% simple return, and CAGR is about 11%. So sovereign gold bond, as you rightly said, has always been one of my favorite investment tool. And I recommend everyone to invest in sovereign gold bond, but one should not look at short-term profit motive in the sovereign gold bond. One should look at long-term investment and look at investment beyond 5 years or maximum up to 8 years, because by that time the sovereign gold bond gets mature. So you get a lot of benefits. You explained it very nicely. You have a capital gain exemption. You get interest. It is guaranteed by the sovereign guarantee of the government of India. You can use it for collateral. I think it's a product which must be bought whenever this tranche is open, irrespective of whether you are looking for a yellow metal or for any other, because this becomes almost a hedge against all the other asset class. So I personally believe that these kind of instruments are not available, at least in our country, and we are very fortunate that 2 tranches are going to open up to March 2024.
Oh, absolutely. So what I also want to know is that while there is more awareness about this and there is better participation as well, but where do you see most of this participation coming from? With the look and feel of it, I do understand that there's a lot of retail into this, but have you seen HUFs and universities and trusts as well make a pie out of this?
Yes, definitely. If you look at all the investment consultant about 5 years back, nobody was recommending gold or sovereign gold, because everyone was saying then invest in mutual fund, invest in equities. But after COVID, almost all investment consultant, including some of the top consultant of our country, have recommended sovereign gold bond, and this has really attracted not only individuals and HUF, but it has attracted universities, trust associations, and charitable trust. So I think the money is coming from all the entities, and the best is that individuals who have been investing in equity are now getting inclined towards the sovereign gold.
How would you look at the pricing? I mean, as you mentioned, in 2015, we were trading at below 3,000. The latest tranche comes in at 6,150 if you're buying it online. Are people finding it pricey? Are people finding it expensive right now?
Well, if they find it expensive, they are going to regret later. So in my opinion, one should not look at pricing of sovereign gold bond. Look at the other attractive features of sovereign gold bond. interest, capital gain exemption, sovereign guarantee. You can use it as collateral. It can be traded on the exchange. So look at other benefits. So and if you are looking for a long-term investment, then I think you can't get a better deal than sovereign gold.
All right. I also want to talk about on how gold, this investment moves in vis-a-vis other various within gold as financial products. So whether it's about ETFs or buying it, online in sense of digital gold, or buying it in the physical markets as well. How would you rank it in that sense?
I think first one would be definitely my top priority is always sovereign gold bond.
Okay.
Second would be ETF, and third would be DigiGold, that is digital gold. The disadvantages in digital gold and ETF is there are no capital gain exemption, and you don't get a fixed interest in both these cases. As far as regulation are concerned, sovereign gold bond guaranteed by government, ETF guaranteed by not guaranteed but regulated by SEBI, and digital gold is not regulated by anyone. So one should be careful. One should invest only in reputed digital gold companies. So first is, as I said, sovereign gold bond, second ETF, and third digital gold.
How would you look at the ticket size within sovereign gold bonds as well? I mean, I do know people buy it as low as 1 gram, and you can go much higher, as high as 4 kgs. But when we see a tranche coming in as an individual, would you say, because when we go out and buy physical gold, it's 5 grams or 10 grams that is sold the most as in sense of physical buying investment. Do we see those numbers, or is it lower than that?
No. I think people have been investing somewhere near 10 grams to 20 grams. But 1 gram is also possible. But most of the investment comes in between 10 grams to 20 grams, and thereafter between 20 grams to 50 grams. So all sorts of investment have been coming in. But if you look at universities and associations and trusts, they always go for about 5 kg, 10 kg, those kind of investment they will.
So since you said that this is a good time to buy even at these levels where we have seen an all-time high in gold in this year itself, so at a redemption when it comes to 8 years later, and yeah, I'm an investor into this one as well, so what should I be expecting after 8 years?
Well, that's a difficult question, but I think one should look at the history. It has given 18% simple return. I would say look at the return of at least between 8 to 11% in the next 8 years. So CAGR should be somewhere around 7% or 6%, between 6 to 7%.
And a final question, what would you say should be a part of my portfolio that I should put in this?
Gold investment should be at least 10 to 15%, out of which if you are not passionate about, but you are a woman, you will be passionate about.
Yes, I am.
If you are not passionate about, wearing jewelry, and not passionate about buying bullion, then out of 15%, at least 7% or 6% portfolio should be in sovereign gold.
Point taken. Mr. Mehta, thank you as always for joining us and having that very exciting conversation. Thank you so much for your time.